John, thank you very much for joining us today. How are things in Toronto?
Things are good in Toronto, waiting patiently for spring, and we have been incredibly busy with the markets in the last few weeks, given everything going on
Oh,
in the
that's
world.
great. This is what I want to talk to you about. And the Sprott name is synonymous with precious metals. And given the move that we've seen in the past year in both gold and silver, I thought it would be a good idea to talk to you to find out what you're seeing in terms of flows into your various products. And the Sprott's largest product is the Physical Gold Trust, or PHYS. And with gold up 25% on the year, give or take, what's the AUM now in that physical product, and how have the flows been?
Yeah, well, I'm very pleased to share with you that we recently crossed the 12 billion US dollar mark. And you may remember, I think it was on January 5th of this year, you and I sat down to do an interview in our office, and you asked me the question about our gold trust and flows in the gold trust. And I said to you, while we did like a little over 300 million last year, we were very disappointed with that number. And it was because gold had performed incredibly well last year, and we just thought investors weren't paying attention. I'm very happy to report that in the last couple of weeks, we've had single trading days where we've raised in excess of 250 million US dollars on each day. And that is a pretty good sign to us that investors are finally paying attention. So the market appreciation of gold has been incredible this year. I think we're kind of matching where we are year to date for the full calendar year last year. So the appreciation in the price has obviously accelerated. But more importantly, I think investors are finally participating by adding new capital to the sector, and we're obviously getting our fair share of it.
That's good to hear. Yeah, some of the daily moves in the price of gold are quite astounding. John, the next product I want to ask you about is the Physical Silver Trust, or PSLV. What's the AUM in this product, and what have the flows been like?
Yeah, I'm also excuse me, pleased to report that the PSLV has recently crossed the $6 billion US mark, and that makes it the second largest physical silver ETF in the world. So we're quite excited that we've had good performance from there. We've had very good relative flows compared to the competitor, but I think it is important to highlight the differences in sizes between the two markets. We look at all the gold ETFs around the world, and believe it or not, they now stand at 350 billion US dollars in collective AUM. And to put the silver ETFs into comparison, they're about one tenth of that size at about 35 billion. So much, much smaller market for physical silver ETFs. And as I said, we've got the second largest at 6 billion. Flows in that product have been very positive this year for us. I think we're outperforming even our larger counterpart. And that's a very good sign that people are focusing on funds that have 100% fully allocated metal, segregated and stored outside of the bullion banking system.
And I'm not sure if you can answer this question, but do you have any idea who the buyers are and what jurisdictions they're from? Are they retail buyers, institutional buyers?
Yeah, I mean, one of the big challenges with ETFs is the transparency of the shareholder base. We obviously talk to investors from around the world, everything from do-it-yourself investors to advisors, RIAs, institutional investors. We are clearly having more and more conversations, I would say, with wealth advisors. I think that's being driven by their clients and some of the emerging portfolio risks that people are trying to deal with, and they're obviously looking at precious metals again, many for the first time in years. So I think that's what's really helping to drive renewed interest and obviously renewed sales into many of these funds. And it's I think a global phenomenon because everyone's dealing with the same risks in the world right now. So I think people are looking first and foremost at gold, given its more traditional safe haven characteristics, and silver obviously, plays that role as a monetary metal, albeit it also has many industrial applications.
And you and your team are always on the road marketing through North America and Europe. Do you get a sense that there's a lot more interest in the sector?
Yeah, I think there has been there's a definitely emerging interest that's just starting to formulate. We obviously see that in the flows going into gold and silver products globally, which we track every day. I think it's, yeah, as I said, it's top to bottom. We recently had a discussion with a large pension fund that basically said they came to the conclusion they just don't have enough precious metals in their portfolio, and they wanted to basically pick our brains on, how to go about doing that. And I think that is happening more and more today, where institutions are saying the traditional role of bonds as a shock absorber to different shocks, whether it's equity, volatility, and obviously we've got this tariff and trade war emerging, is just not playing the same role as it once did. And I think that's one of the reasons why gold has really reasserted itself as a monetary metal, because it is performing very well against the backdrop of incredibly high volatility and a lot of risks that nobody thought about even 3 months ago.
And every asset class seems to be under attack. Stocks, bonds, the dollar, and the only one that's really hanging in there is gold,
Yeah,
and
I
to a
think,
lesser
look,
extent, silver.
yeah, gold has obviously proved itself over millennia as a store of value. And if you go back to numerous financial calamities and dislocations over the last few decades, it has always been kind of a safe harbor asset class in those kinds of storms. And once again, I think gold is proving its worth by being very resilient against a backdrop of a lot of volatility, including traditional reserve assets like treasuries, US treasuries, and the US dollar, which have been very soft of late. And I think investors are clearly rotating to gold as an alternative asset class.
So let's do a deeper dive on silver. Gold is making new highs every other day, but silver is nowhere near its all-time high. And the fundamental backdrop for silver has never been better. The silver is the second most used resource in the world, second only to oil. It's used in over 10,000 different products and applications. Annual demand is keeps increasing. It's at 1.2 billion ounces, far outpacing production. And if the sector is continuing to run at a deficit every year, why is the silver price lagging compared to the gold
Yeah,
price?
yeah, it's a great question, and it is incredibly, I think, frustrating for us and our investors that silver is just not catching more of a bid here. If you look at the gold to silver ratio, which basically is a barometer of relative, value between an ounce of gold and an ounce of silver, I think yesterday we hit 100 to 1. So you can basically buy 100 ounces of silver for every 1 ounce of gold. That is about as extreme as I can ever remember seeing it. Even at 80, it's considered extreme. So 100 is really off the charts. It really does reflect one, gold's incredible run, and two, silver just not participating to the same degree. So why is it not participating? Well, as I mentioned earlier, it is an industrial metal. There is incredible anxiety and uncertainty about potential global recession, trade wars, which are obviously catching a lot of products that are made in China. If you think about solar panels, which China dominates, about 20% of the silver supply goes just to solar panel production. So there's definitely some negative downdrafts on the industrial side that are weighing silver down. The other element that is not propping up silver is obviously it's not a monetary metal that is held by central banks like gold. So obviously central banks have been huge buyers of physical gold the last 3 years. They don't accumulate silver just because of the value to volume challenge with silver. We tend to see more retail accumulation of silver. And we are starting to see groups around the world shifting buying preferences from gold to silver. I think the one that is probably the most interesting is Indian investors. When the price of gold gets very elevated and out of reach for them to buy, they tend to shift their buying preferences to silver. So we see huge amounts of silver being shipped to India as a monetary asset. But the industrial side is clearly weighing on it. And, silver at around $32 an ounce, it's hard to say this, but we are still way off, the highs of $50 that were achieved over 10 years ago. It's hard to find a commodity that is still so far off its last high. And silver is one that to us feels like it needs a big catch-up trade here.
Yeah, so a couple of points. You mentioned the gold silver ratio at 100 times right now. Back in 2011, which was the last time silver peaked at $50, it was trading around 30 times. So it has a long way to go before it catches that or achieve that same sort of level. The other thing I just want to clarify is you talked about the industrial demand for silver. And so just so I understand you, you're saying because there's such a high percentage of the demand is used for industrial purposes, it's starting to trade more like oil and copper.
Yeah, exactly. It's a hybrid metal. It's a bit of a chameleon silver. When the economy is under stress or there's uncertainty about the economy, you find that silver starts trading more like copper, which is obviously a key industrial metal. Right now, it seems to be more heavily influenced on the industrial side as opposed to the investment side. And just, I'm going to share one stat that really shocked me is that earlier I referenced those gold ETFs and silver ETFs globally, and obviously we've seen some pretty significant inflows into gold ETFs. Our last measure here indicates about 25 billion have gone into gold ETFs year to date. If you compare it to silver, the silver ETFs globally, we're only at $500 million year to date. So you can see the relative skew of investor flows going to gold ETFs as opposed to physical silver ETFs. And obviously, as I mentioned earlier, the relative sizes of those two categories are kind of 10 to 1, but the flows are obviously way skewed to gold ETFs right now. We need more investors participating in silver to give it a boost for sure. The focal point is gold. And, much like we saw in 2020 during COVID, gold was the first mover. It broke out first. And then a few months later, what did we experience? Silver kind of caught up and slingshotted right by gold. We wouldn't be surprised if another dynamic kind of played out at some point this year.
So I want to ask you about the silver price. Earlier in April, the silver price got hit relatively hard. It went from $30 down to $27 in a relatively short period of time, and it has recovered. But do you have any color on that move?
Yeah, I mean, it's very frustrating to see those kinds of intraday moves in silver, and they seem to be disproportionately being driven by the paper markets or the futures markets, where people are dumping huge amounts of silver through derivative contracts, often at, kind of funny times of the day when markets are thin. It does feel to us like somebody is trying to move the price of silver around from time to time, which is very frustrating to see. But as you mentioned, silver has kind of bounced back here and it is behaving a little better. We definitely see another dynamic happening with the tariffs. The proposed tariffs are not impacting bullion in the United States, so we've definitely seen, I think, a little bit of a cooling down around this heavy shipment of silver from London vaults to COMEX vaults in the US. That potential arbitrage is dissipated, and we wouldn't be surprised if the flow of silver from Europe to the US is stops and actually starts to reverse. We may see some metal starting to go back, but some of that is created some noise and extra volatility in the silver price in the last few weeks for sure.
Well, that was a great overview, John, and I want to thank you very much for spending time with us today. If someone would like to learn more about Sprott and its various gold and silver products, where can they go?
Yeah, we encourage you to start your journey by visiting us at sprott.com. We have a ton of educational material, insights, for you to help educate yourself about these different categories. You can also phone our sales team. We have a 1-800 number on the line if you want to speak to somebody to better understand what we're all about and some of the differences between our offerings. That we'd encourage you to start your journey there.
Once again, John, thank you.
Thank you for having me. It was a great chat.